Hey, what's going on, YouTube fam? Just back on here with the 2021 portfolio turnaround. If I had to do this again, I would do this strategically in a total different way and go one stock at a time and really build my position in that particular company that I want to build in and go from there. However, I have trimmed the fat and got rid of some of the nonsense that I had in here and going to really revamp my portfolio and make it work for me going forward in 2021. Again, I'm not a stock analyst, I'm not a stock advisor. I will encourage all individuals to do their own research and investigate the companies that they want to invest in. Also, look up your tax information and understand what tax bracket you're going to be in, and understand that the stocks that you sell before a complete 12-month year time puts you in a different tax bracket for that individual stock. And again, also your own income puts you in a different tax bracket. So again, just individual taking time to invest in that knowledge of understanding how to balance their portfolio on what they want to add, and also understand the tax bracket information going forward for that end of the year and calendar year tax roundup. Let's move forward here. I don't want to drag this video too long, and I will move it forward here as best as I can. I am using the Cash App particular investing platform. Not a huge fan of the Cash App platform at the moment. There are some out there like Webull, Robinhood, Schwab, TD Ameritrade, and many others out there that many would say are way better. And I would have to agree, even though Cash App is still in that infancy stage, it's still growing, it's still developing. And certain things I like. I do like the more simplistic layout. I definitely like the logos of the company. I think that just really pops when you're strolling your portfolio. To me, that just hits a home run compared to all these other ones that I just mentioned. And even SoFi, I believe, have the logos laid out like this as well. So I do like that when you on your portfolio, it just makes it pop when you're looking at it, when you can just really strategically just identify these companies right on. Some of these little small, minute changes that Cash have added with the news information up here, strategically putting the stocks in a little category here. These are some of the little small changes that have been made to this platform. And so I understand Square, which is traded on, publicly traded, owns the Cash App platform. So again, as goes Square, goes Cash App, and Cash App is their bread and butter. And so hopefully, as Square continue to rise up, they will take that money and reinvest it in this Cash App platform overall to improve it overall. But I really believe that eventually the Cash App investing will have its own app, which would make more sense. So they can add more things. Like when you click on the stock, you can really see the percentage of the dividend, how much of this particular stock you have in your portfolio, when in the earnings date coming out. It's those things that you find on Yahoo Finance, Webull, Robinhood that you don't have on here. That's really important. You would like to have that on here. So again, if I had a major issue, those are the ones I just outlined. So let's go and move forward here. Again, like I said, this is a real revamp of my portfolio. There are several videos of people investing, and everybody had their own strategy. I've seen some of the wildest of videos, and I've seen some of the professional videos. I'm not here to really judge nobody's portfolio style of investing. I just real stick to mine. Again, I'm not a stock analyst or advisor. I'm just really showing what I'm investing and how I'm going to turn my portfolio around to put it the way I want it to look and make it start to grow in the position that I want it to grow. So again, I'm starting with Whirlpool. Whirlpool is one of the more legendary brands in the market as far as home appliances. People would know it from the typical washer, dryer, refrigerator, stove, microwave, and dishwasher, and many other products. Whirlpool, like many other brands, tend to license their name out so smaller particular companies can use their licensed name to sell their products. And you see this a lot with GE when you go in a store and you see a GE TV antenna or a TV remote control or even a surge protector that has the GE logo. Well, they just using the GE logo that's licensed to that particular brand for those products because the US consumer is more familiar with the GE logo than somebody that's creating their own startup company, et cetera, et cetera. So again, licensees have a great play as well. And so I do like Whirlpool. I like Whirlpool as far as since they did a merger and acquisition and brought out the Maytag brand a while back. And so Whirlpool is definitely that staple. They do have competition with South Korea with Samsung and LG. LG has their own washers and dryers, and even Samsung has theirs along with refrigerators as well. So they're definitely feeling some of that competition from the overseas market. However, Whirlpool is a legendary company, and of course, it's in that portfolio. Let's move on to Chewy. Chewy is a pet online retailer specializing in selling pet products and pet services overall. It's a great play in this time of this video's recording and the pandemic that we're living in. More people feel more comfortable with shopping online. And let's face it, there are a lot of diehard pet lovers out there who love their pets and willing to do pretty much whatever for their pets. And so this is a great strategic play, not only for the pandemic, but for the convenience as well. What I like about Chewy is not only the money that they're generating and as revenue and income, but somebody in their marketing department is very smart and they are advertising. And with these advertising, you see a lot of commercials, a lot of ads. And with this marketing, it allows people to understand what your brand does and how your brand can benefit and as a service to someone else. And so they get an A+ from me, personally speaking, of their marketing. I have seen several Chewy commercials. I don't own any pets, but if I did, I would definitely be going with Chewy. Now, in the hindsight, I will be going with Chewy anyway because indirectly or directly, if you will, I will be paying myself from ordering from Chewy since I have the stock. But I'm not a pet owner, but I have the great common sense to understand there are diehard pet owners, and this company has positioned themselves very well. Great marketing, which will then generate more revenue because people will understand what they bring in as a service to the table. What I do understand, the new IPO, Petco, is also coming soon. I will be adding that to the portfolio as well to have that, what I call the Michael Jordan, Scottie Pippen, that 1-2 combination of two companies doing the same thing in the portfolio, kind of like your Home Depot, Lowe's, UPS, FedEx, if you will. And so I can't wait for that IPO to come out with Petco, maybe even PetSmart along the way. Let's move forward. So I do love Chewy. The only thing is I'm waiting for the board of directors to sit around the table and offer that dividend. And then I will really go in. Next up is Nu Skin. Nu Skin is a cosmetic play that offers skin products and many other personal beauty products for ladies out there as well. They direct to consumer. You can own it online and they'll ship it right to you. It's a great play. They do offer a dividend as well. I personally like to play and looking at some of their financials as well going forward. 1-800-Flowers. To me, this is a personal play. For me, I think this is a year-round revenue generator. It may not generate the revenue that the street is looking for, but personally, I think it is that year-round generator of revenue and income, specifically that there isn't a bad time to send flowers, especially in this pandemic that we're living at the time of this video. People want to send flowers to their loved ones because they can't see their loved ones. You may have a death in the family or a death to this pandemic, and you want to send condolences. Maybe you got good news. You want to send flowers for congratulations, a birthday, a Valentine's Day, etc. 1-800-Flowers is that great play. And I'll perceive that Valentine's Day most likely is one of their biggest days as people are sending flowers to their significant other, if you will. And that will look good on that quarter that falls in that Valentine's Day for 1-800-Flowers. So for me personally, Definitely had that in the portfolio, and we'll be adding more strategically for the reasons that I outlined there. So I definitely like that. Dollar Tree. Dollar Tree owns Family Dollar, and Family Dollar has expanded some of their food items in their store to include freezers now. So they got the dairy products, which I like. They also got into the cigarettes, of selling cigarettes and things. So, okay, all right, great. Both of those generate revenue for that particular store. Great. And then, of course, you have Dollar Tree, which sells everything for $1. Great. What I don't like about this is Dollar Tree needs to sit around with a board of directors and enact that dividend, because you got two stores bringing in major revenue, especially more revenue in the time of this pandemic. So again, in 2021, if they board of directors sit down and just initiate a dividend, then I'll be more interested to really go all in Dollar Tree. Of course, Dollar Tree and Family Dollar competes with Dollar General, and Dollar General is paying a dividend, and they are publicly traded. Let's move forward. Albertsons is a line of grocery chains or a supermarket chain, kind of in the realm of Kroger or Publix or Safeway, Costco's, and many others. I do like Albertsons. It's mostly on the West Coast, California, as it's now moving east with new stores. I do have one in the portfolio, and I will be adding more. Again, this is a long-term play. I mean, and it's more common sense for me, again, personally speaking. Especially in this pandemic, more people are going to go to the store and buy their needs, more comfort foods and just household items. So they're going to go to their favorite supermarket and buy those products. Albertsons fit that bill, along with Kroger, Ingles, Publix, and many others out there. And so again, the supermarket play, for me, personally speaking, is a strong play. Albertsons offer a dividend, so does Kroger, and even Costco's. Let's move forward. Qualcomm is a legendary, I like to say, semiconductor chip maker who makes certain chips and sets for the Apple products, including the Apple iPhone. Even though Apple has came out and said they're going to make their own chips now, well, back in the day and most recently, they was using Qualcomm chips. And even Qualcomm, even if they do lose Apple as a customer, they still make legendary products, and I don't think they would be really hurt that bad. In the midst of this 5G expansion, other companies will emerge and they will use Qualcomm service to increase their own recognition and brand awareness using Qualcomm products, especially as we move into this 5G and this quote unquote the Internet of Things that is taking off as well. And that brings me down to American Water, which is a great play. For me personally, I like it, and I just wanted to make sure I have that in the portfolio. That brings me to Intel. Again, Qualcomm and Intel has been in the news taking dips based on the news of Apple and Microsoft claiming that they're going to make their own chips. And so again, Qualcomm and Intel has taken dips on that news. For me, well, that's great news. I got a smile on my face because I'm going to buy those dips in Qualcomm and Intel because, like I said, the 5G and 6G expansion that's happening globally, Intel and Qualcomm will be right there, looking to make a play in that space. And so I'm looking to make a play in those two brands. Let's move forward.